Hello, good afternoon, everyone. This is Baja Pips. It is Monday, July 24th, 2023, 2:28 p.m. Eastern China Time, and I'm going to be doing my weekly technical breakdown. I am eyeballing a few pairs this week, and I have a ton of stuff to put on my watch list in this video. So let's get started. Right now, we're currently looking at the Canadian dollar against the Japan yen. And before I get started on that, I want to just break down my current outlook for the actual week for the economic calendar. I like to do this in advance, just a little bit ahead of time. I'm using the daily FX calendar, as you can see right here. And it's pretty much a clean day, clean week looking, like a good start for the week. But we do have some conflicting news for the remainder of the week. So this is today, tomorrow. Let's check the next 7 days. I always have a weekly outlook at the beginning of the week. So we can see that right now we have a bunch of low impact news. Probably won't be day trading the Euro USD today because there's a lot of low movement on Mondays, and I just try to avoid Mondays in general because of the low movement. We can see it's July 26th. There's nothing much. There's consumer confidence on the 25th, which is tomorrow, but nothing big, nothing major, nothing really market manipulating. The high impact, I'll probably just stay out of that if I'm day trading. But for the most part, we do have a very nice, clear goal for the week. But on the 27th, which is in about 3 days, we have the Fed interest rate decision, which is a very high impact news announcement in the US dollar. And that could send a shockwave throughout the entire market. There's also the ECB interest rate, the European Union, that is also on the same day. And because of that, that's going to be huge impact on the market. So I'll probably end up using tighter stop losses during that time. And if it gets hit, then I will be out until after the announcements. Probably look for the re-entries at the end of the day. And then there's the BOJ interest rate decision. So if you're trading JPY pairs, look out for that. Other than that, do have a pretty just there's like a day interest rate decisions, and that's also very very like I said, it'll send a shockwave through the market. And this is the end of the month, so just be aware of that. You don't really want to get caught up in any type of speculation and traps. So now that's out the way, I'm going to get back into my charts. So we are looking at dollar against the Japan yen. And I'm going to just break the technicals down. I like to break it down before London session, preferably before German session. But I did get kind of caught up in a little bit of a nuance this morning. So I'm having a little bit of a delayed day. It's totally fine. Nothing is really moving just yet. So I can still break this down and get things marked up for you all. So I probably won't have anyone viewing this video for at least a couple hours, but with my very few viewers, definitely just take a look at this. It subtracted time from when I recorded and posted it, and yeah, you can see how the real market actually moves. So right now, on the 4-hour time frame, we recently had a nice bullish uptrend on the Canadian dollar, and we just recently had hit a resistance from July 10th, and price did pull back and react from that resistance. I had a buy in from last week on Friday, and I did get in, and it did shoot up very nice amount, about 126 pips before slowing down for the day. Fridays can be a little bit messy, so this could have been profit taking for people that was already in the trade from earlier in the week. So I got in the trade a little bit late, and that can happen, which is why I don't really like entering swing trades on Friday. I prefer to enter the swing trades earlier in the week, so I could have gotten in on a much more easier move on up. But it's all good. Things happen, and it looks like the market just started moving. And I'm going to be looking to get a nice reward to risk of at least 3 to 1 on this trade. I'm looking at a nice trend continuation pattern. So if I can draw my trend line, I'll show y'all right now the most recent trend that we are undergoing. So we do have a nice bullish trend right here. It is currently sitting under the trend line. So like I said, there's some congestion, but I am looking at a nice breakout. If we're looking, I'll put the horizontal line right above the highs of 107,390. So we can break above 107,390. I'm willing to re-enter this trade for a trend continuation pattern. Unfortunately, I did have some stop losses right below 106,835 and price, or right around 106,835, and price did tap my trailing stop. So I had an entry right around here, and price did go in my favor, and it did hit my trailing stop loss, therefore closing out my trade. And we can actually see on the account history that trade that played out right here. I did take the trailing stop because I am uncertain as to what will possibly happen afterwards. That happened maybe a few hours ago, and it's okay because I can always get back in the trade. It just did not work out in my favor, and it's also signaling some potential chop. In the meantime, I'm going to just be on standby, and I'm going to wait for a possible breakout to the north side again. I also want to create a support zone, so I'm going to mark up a support zone as to what I'm watching. So if price does happen to hit the lows of 106 or 105,638, that's when I'll be looking for a possible reversal, and we could experience a bear market at that point. But until that happens, I am still bullish. I am still looking for buys, and I'm actually going to place those buy stop orders right above here very shortly. On the 4-hour time frame, it's not really there. It's not really triggered yet, so it's very hard for me to actually place an order just right now. Because what I would like to see, I would like to see the market already react to what's happening on the 4-hour, and right now it didn't even react. It didn't even show me that it's going to break north yet. So I'm going to be sitting on my hands and being on standby for a little bit. If I do look on the 5-minute time frame, I can see a range that is happening. So right above that zone, price did have a false breakout, and it is climbing on up north progressively, very slowly. I'm going to mark this one on up as well as an uptrend, just a minor uptrend, and it's not as strong as I would like. So what I would like to see is a move back to the higher end of this range, which is going to signal a false breakout, and then I'll have maybe like a 67 pip stop loss, and I can then take this one on up. So if I do have a order placed right now, because it is still pre-London session, I would place the order right here as a buy stop. Now, I don't want to risk anything more than 1% of my account on this trade. So if I'm looking at this, I'm going to place my stop loss right around 106,776. Let's do that right now. This is basically saying that that was a false breakout, and we are looking for a nice bull run. As long as price does stay above these daily lows, we can definitely see that happening. I'm going to be risking a little over 1% or a little over 0.5% of my account on this trade. It is a swing trade, so anything could happen. I want to deploy more capital as we keep on going on. But, you know, give or take, this does work out. I could risk a little bit more risk on this trade. As you can see, it is a very nice potential. 65 pip stop for, let's see the target. My next area that I'll be looking to take this price on to will be the higher end of this range, preferably taking out these highs right here at 109,377. So I'm going to place that target right now. I'm only going to risk a 0.5% on this trade. I just want to show y'all. So a 0.5% for 2% gain. 195 pips is what I'm gaining. So around 200, and I'm risking about 65. So that's about a 3-to-1. And this is if the bull market wants to continue to rally. Since this would be technically a second chance opportunity trade, I want to be a little bit more risk on and a little bit more heavier on this trade. So what I'm going to do is I'm going to actually put a little bit more. If it's my first time entering the trade, I like to risk around 0.5%. But because I already had my trailing stop hit, it's telling me that, okay, I can be a little bit more aggressive on this secondary entry because if it does hit trigger again, more than likely, I'm going to be sitting out of this trade for the remainder of the week. So instead of 1.4, I'm going to actually place a 2 standard lot or in a buy stop. So I'm going to have to just kind of modify this and rearrange it. Just a minute. Delete that previous order. Very simple stuff. Assess my risk, make sure I'm risking the right amount. And it could be a little under 1%. It's fine. 924. So a little bit under 1% risk on this particular trade. This is what I'm willing to risk. I'm totally fine with the loss if it does happen. And my reward is going to be massive now, as y'all can see. Happens. It's only 3R, but the 3R is going to actually be pretty solid, about 2.7% of my account. That's going to be the potential gain on this one swing trade. So that's actually great. And I'm going to let this play out. So everything on CADJPY is already broken down for you. I want to move on to the next couple of pairs. Before I do that, I like to check out Euro USD just to see how the market is looking for the day. Like I said, I don't trade on Mondays. I don't day trade on Mondays. I just look for swing trades. So right now we can see the Euro USD is undergoing consolidation, just a range bound market. Nothing exciting, and it's extremely low movement. I can already tell because of my experience trading. It is moving about 15 pips since its most recent, since the start of the day, but start of the German session. But at the same time, I just don't like the way it's looking. There's a couple things I'm going to mark on up. I'm going to sit on my hands today. Unless I see something crazy happen within the next hour, I'll check back on it. But we are in a sideways market movement. So as y'all can see right here, market did break on up the highs of the day. It got rejected, and there was an attempt to break on back up. It got rejected, and then there was a secondary attempt. It got rejected. So to me, there's absolutely no buying in this. And we have about 1, 2, and we're creating the third wave down. So there's no buying in this little range right here. It's too congested. I call this chop. When the triggers are failing and we are going into 3 or more waves of the same size and within the same area and the same time, we're going to just sit out. 7 pips. It's trash. And I would need to see an explosive move north and then price actually come back on down and form some reversal back into the daily range, or on the other hand, drop down to lows of the day even further, and then a reversal back north. If I don't see that, I'll probably sit out. I haven't really seen any trending moves for the day. I haven't seen. This is from this is the past 6 hours. I haven't seen any downtrends, as you can see. I haven't seen any uptrends. It's pretty much been whipsawing from lows of the day to highs of the day with no valid signal to go long or short. I mean, if you get lucky or if you're willing to wait through a lot of chop, there's definitely a couple moves in here, but I do not get excited over this type of environment. You can check back several hours from this video recording to see just what I mean. There's absolutely no moves. If you look at my previous day trading videos, you can actually see the markets that I tend to like to see. I tend to like to trade, and this is not one of those conditions. Hypothetically speaking, if these trends right here, up, down, up, if they took up most of the screen, then it would show that there's great movement for the day. There's a lot of opportunity, and I have a higher probability of my trades playing out. But right now, there's nothing really happening. So once again, this is why I sit out on Mondays. There's not really much to do. So I have all this broken down. CADJPY, I'm going to eyeball this, but no guarantees. It could just fail, and I would check back on this at the end of the day. So there's nothing else that I'm going to do with this for the remainder of the day. I'm not even going to trail my stop loss, nothing. So whatever happens, happens. NZDCHF, I want to break this one on down next. I'm only going to break down a few pairs, so don't worry. I won't break down the entire market. I have a lot to look at today. That's my homework. But NZDCHF, take a look at this 4 hour. And we are very clearly on a downtrend now. We've broken out of a, looks like several month long range. Price was congested for several months. There was definitely opportunity to get some longs and shorts within the range. The range was big enough. It was a wide enough range to take trades. But I just started looking at this pair again after this initial downtrend happened on the 18th, and we can see that there was a nice trend continuation move. It didn't really go that well. You could have had opted into another trade right there with the risk of possibly 26 pips. You would have taken it on down. You would have probably collected 2 to 1 so far. It is experiencing a little pullback. There's nothing that I would do right now as far as trading it goes because I'm a little late to the entry. My ideal entry on this would have been right around 0.538. And I'm a little late to that trade. And no, I do not want to just enter anywhere randomly because I'm not going to get the most optimal reward to risk on this trade if I try to just force it. So that's why you're going to see me sitting out of certain setups. But I'm interested in this trade if and only if the 4 hour does revisit the lows of last week, which is 0.53268. If it does revisit these lows, within the next 24 hours or so, could take longer, then I'm willing to look for an entry on the 5 minute and then take it on down. So as of right now, there's nothing, no trade for me. I'm gonna sit on my hands, but I'm gonna eyeball this pair. It's gonna be on my watch list for the week. Once again, if we break the lows of 0.5328, I do expect. Let's look at the previous wave size just to see how large this wave was prior to this happening. We could experience a nice drop, maybe up to 200 pips, 100 to 200 pip drop, and we're just gonna have to hit new lows. There's nothing really to see on the 4 hours, so I would drop my time zone, get onto a higher time frame. As you can see, we're on a strong downtrend, strong bear market, but we do have some support nearby, so just be a little careful. I would be very cautious with the sell, and on the weekly, we do have a longer term range. Looking at the monthly, it does break that low. We do have a long ways down, so that's good to see, but we are still in a longer term 10-year, 20-year range, so just be very careful. I am not too interested in this pair, but like I said, it can always change. Like I said, if the 4 hour does give me an optimal reward to risk, maybe price wants to reverse in the next 4 hours, it could definitely do that. But at the same time, I would still need to see the lows of 0.5328 broken before considering a short. So I'll get back to that later on. Euro AUD, let's take a look at this pair right here. This is all raw information. I don't really assess this market before recording. This is just my straight up knowledge based off of price action interpretation. No strategies required right now, but I do implement my strategies as I see the market moving. So here's another trade. Euro AUDs, just crap, trash. I don't really like it. As you can see, it's just been whipsawing for the past several weeks. We can see starting from over here, this was on the 28th of June. So the entire month of July, just been a little bit of congestion. As we can see, price was just whipsawing back and forth between highs and lows. We had a recent breakout, but the breakout did fail and it did come back deep within this range. So there was no way I wanted to take a long. Like I said, the breakout was just too deep. Price consolidated, pulled back, and now we are possibly going to move on up. But for me personally, this is just not the greatest. You could go for this setup. We do have a potential to hit new highs of the month around 1.6664. But if I don't like the setup, I'm just going to sit out. This to me is not the greatest setup for me. Somebody else could take this. So y'all can see it doesn't really have clean moves. It's basically been in a range 1, 2, three waves, four waves of the same size, similar size. All it did was create a new swing high. And the downfall, one of the setbacks about this trade opportunities, if I do take that, I would have like about a 70 pip stop loss. And I need to go for at least 3 to 1. So, if unless it's going 210 pips, which is like the highs of the quarter, I don't really want to take that long because we do have some resistance, longer term major resistance that we may be crashing into around 1.66075. And that is a major resistance because all it did was expand this range that was already chopping around for a while. So we could see what we just seen, a breakout of that range, a deep retracement hitting your stop loss. And, a long would have been right here, for example. You would have had probably like 1.5 to 1. You can see not even a 2 to 1 before it came back reverse and hit your stop loss. And that would not be, that great. I would actually opt out. Show y'all right here. I would have probably been in right here, right around the zone. And I would have probably had a trailing stop about for 20 pips. So I would have collected 0.5 R. And that's nothing. That's not even worth taking the trade before that major down move happened and hit new swing lows. So for Euro AUD, I'm actually going to stay out. Stock market. Let's see the stock market outlook. Nvidia is beautiful on the weekly. But I'm going to look at the daily on Nvidia. We have experienced a 3-day pullback. And unless price breaks above 465, 65 highs, I'm going to just sit on my hands on this. The stock market is currently closed, but I will be looking for entries around 474.93. As long as we can have a nice gap up when the U.S. session opens and a continuation north, I will definitely be looking for some longs. It is a healthy uptrend still. We definitely just experienced a possible false move against the bull market. Could have also been profit taking. I would have definitely been in on this trade from the 28th of June. And I would have took profit as of like 3 days ago. So risk would have been about 318 pips and would have been up a little bit over 1 R before trailing stop would have been deployed. I would have collected a little bit under 1 R and be waiting for a possible continuation north. It does happen. We are at the end of a month, and unfortunately, markets can do that. But that's Nvidia. Nothing too much to say. The market's closed. We'll find out more as the week goes on. Meta, same thing. Profit taken as of recently. These are all tech stocks, so you probably experienced similar stuff happening across the industry. I like to trade the S&P 500, but unfortunately on this broker, it doesn't give me that option, or at least the NASDAQ, because those are a basket of stocks. NASDAQ is a basket of tech stocks. So like I said, they all pretty much move similar. So if you see a pullback or a breakout on one of them, majority of them will follow suit. And it's probably smarter to trade the NASDAQ or the S&P. You could pick individual stocks as well, but yeah. Nvidia is doing something. Meta is more likely going to be doing the same. Volkswagen is an automotive stock. It has been garbage. As you can see on the daily as of recently, we are experiencing a possible breakout of this range, but I do need to see a lot more happening. We have 1, 2, 3 waves. And to me, I would not have went long here, even though we are looking at a possible breakout north. I need to see a breakout, pullback, and then a possible continuation. So right here, I'm just going to mark this one on up for resistances right here. That's a major resistance. And then the major support is going to be right around 119.03. So we are still tied up in a range. I need to see buyers kind of form this pattern right here. A nice breakout north. And I need to see price continue on up. And then I see a little pullback where I can get in on a long. If not, then I'm just going to sit on my hands, not trade this neither. I'm not bearish anymore. I was bearish a few weeks ago on Volkswagen, but it looks like that bear market ended. There was a possible short back around June 27th, and it failed. And then there was another short right around July 5th, July 4th. Around this time, there was a second chance entry, and we could see that you would have been in the money shortly, but you probably would have been, I would have risked maybe 25 points, probably been up a little under 1 R before the market kind of reversed, and it's hitting that stop loss as I speak. The market's closed, but the Volkswagen market will open in uh, about 7 minutes. So maybe we'll be able to see the gaps. Uh, GJ, let's get to GJ. GJ, CJ, they're all pretty much moved similar. The JPY pairs, they don't fully correlate, but as we can see right here on the 4 hour, there's a possible breakout north. I would like to see more buying pressure on GJ, so this is why I chose CJ over GJ. We have 1, 2, 3 waves of similar size, so I need to see a breakout stronger than this, pullback and continuation. I actually need to see a strong breakout of 184, 325 and further. So GJ is, it's not the strongest pair for me of the JPYs, but the Canadian dollar has been incrementally increasing over the past few weeks. It has been getting stronger, the Canadian dollar, and the Japanese yen just made a slight upturn on the curve, so on the bell curve. So we have seen some congestion in all the JPY pairs, but I do believe we are still bullish on GJ. It's just a matter of time. I trade a 4 hour time frame on swing trading on the Forex market, but if we look at the daily, we can also see that there was a potential false move down, but we're doing that 3 wave trick, 1, 2, and we're experiencing that potential 3rd wave. So I am not in this unless you're on a much smaller time frame and you have smaller stop losses into profit targets. You could definitely trade this. Every time frame has its own patterns, but long term, medium term, I'm not going to be interested in GJ unless the highs of 184.505 is broken. So I'm going to mark this one on up as well. Y'all can see this is the full-on outlook of the stock market, the Forex market, and even break down some futures for y'all. This is the benefit of being dynamic, being able to trade every market, any condition, it doesn't matter. Being discretionary with my trades is also big. I can choose to trade or not to trade based off of the context of the markets. You can see this is years of hard work, but it will pay off. It does pay off over time because I'm able to be very comfortable with what I do and what I say. Everything that I'm saying, like I said, is raw data. Like I don't even know what's happening before I click on the tab. But I'm gonna get to the next one. USD very nice. It's similar to NZD on the daily. We had a very strong bear market, and I'm extremely bearish on this pair. Looks like we just started breaking out on the daily. On the weekly, it's very strong. On the monthly, it looks like we have broken out of a several year range from 2013 actually all the way through. And yeah, I do expect this to continue down. We could experience a little pullback, but it needs to go deep with 0.92549 type of deep for me to really next month, if it's bullish, and we might be reversing, but that doesn't happen. More than likely, we're going to continue on our downtrend. At the 4 hour now, seeing if there's a possible move. Absolutely not. The 4 hour retracement was deep around the Friday of last week. We had some down moves. There's a possibility of a nice short coming up, but I'm going to sit out of this pair because I would need to see the lows of 0.85568 broken, and then I need to see a nice pullback and a possible continuation outside of this range that we're currently in. It's about 130 pip range, and yeah, I just don't want to gamble. If the setup's not looking great, I'm going to just be completely out of that, and that's that. GU. Let's take a look at GU. We are currently undergoing a pullback. It's a deep retracement, and it's a super deep retracement, actually. It's not just your normal retracement. I'm going to zoom out of this so we can see a little bit more context. We are currently pulling back. Like I said, it's not your friendly pullback. It is a deep retracement. I would need to see the highs of right here. Mark it on up right now. The highs of 1.299, preferably 1.3 if you want to stick with the psychological areas. Right around here. Kind of want to see these highs broken and possible continuation north. But this also is not the most favorable setup for me. Some people might like to trade this, but me, I need to see a lot more action for the buyers. And on the selling side, let's see, we have a possible short back into the lower end of the range. Then just a wide range, but I would say the potential to get back down to 1.26019. We do have inflation coming up, but this type of setup, once again, it's not too clean. Definitely would not go long. Absolutely not. I'm not bullish. As far as bears go, you could definitely look for some short-term moves. I just don't like this setup. I really don't, and I'm just gonna leave that one alone. Pretty much said what I said. Look at gold, but I also want to the market, the London market is about to open. So let's look at LVMH before it opens. You see this daily right here? This is in a range, and it's going to open within the next 1 minute because it's 2:59 p.m. in China. We have one wave, we have two waves, and we have three waves that broke out, pulled back. If we break above 877, we have a possible bull market run all the way up to the higher end of this longer term range at 901.60. So if we do gap up in the next minute, that's great to see. If we gap down and retest the previous day's lows, that's what we're going to see. So give it a minute, and this is going to open very shortly. I can actually show y'all right now. You don't see anything right now, but within the next like few seconds, this is going to open live in front of you. You can see I record this live. Boom, we had a gap down. Okay, so this is why I don't trade things within range. You can see LVMH, 1 minute, gap down, but we are viciously moving back on up. So my analysis is correct. Looking at that 4 hour. Whew, gotta kind of fix the zoom again. Just a minute. I don't trade the 4 hour on stocks. I trade the daily only because there's a lot of noise and then the markets close and reopen the next day. So there's a lot of choppiness. But like I said, on the daily, we have a nice breakout north. We have a pullback, and yeah, this is a possibility of a bull run. Literally, like you could still be long right now. The stop loss would be about 309, 310 points down, around 839.55. That's probably where I would deploy my stops. But right now, we are bullish. I personally don't like this setup because we are in a range within a range. So this doesn't have to go up, but you know, we had a breakout and then we had a super deep retracement. I don't like these setups personally. So I have discretion to sit out, but it's good to see. It's good to watch. Like I said, we had one wave, two wave, three waves that went nowhere. And we finally had a thrust on up, and the pullback kind of went within that range again. So the breakout is happening in that range. So to me, those are just multiple red flags. And I personally just sit out. I don't like trading these. I will come back to it at a later date. If we are above these highs, monthly highs, quarterly highs, then I may end up taking the trade. So I'm going to mark that one up right here. Quarterly highs, 904.95. So this is a bullish week. I would like to see a breakout, pullback, continuation of this longer term range, kind of like what it did in the past. So come over here. We have a little range congestion, but it broke out, pulled back, and it continued north. You could have probably had like a 3-to-1 right here. You had a 271 go over 600. It went up about 573, so it didn't necessarily give you a 3-to-1, but you were able to get at least one R before reversed. To me, these are not the greatest markets. Like I said, it's been pretty much moving sideways since December. And see, pre-December, it was actually on a nice upward trend. But that's LVMH, Louis Vuitton, Moet Hennessy. If you guys like that luxury brand, it's just been kind of congested. It's a luxury industry, so it is what it is. What else do I want to look at? Y'all want to look at some gold or some silver? Maybe we look at some gold. Gold is congested. Gold is going through absolute nothingness. We're looking at gold right here. I personally don't want to trade gold on the daily, but and it is a futures market. You can see it's a bunch of chop congestion. It's been doing that since April. We did have a nice rally. It's been moving on up, every month, but Gold is something, it's a futures pair, so it's probably something that I will look at trading longer term. We are at 3 year highs, and so we are kind of consolidating. It's not the best time to trade gold. Looking at the 4 hour from my swing trading time frame, I personally would not really be interested in gold unless it breaks the highs of 1969. There's a possibility that we could have a nice bull rally. So it needs to break these highs right here of 1969. As of right now, it is moving on up. Gold could actually be something that I would like to possibly trade. It's a very clean move on up, and I could possibly enter this live in real time in front of y'all. I normally trade one pair at a time, but gold is looking very nice. We did have a false breakout north, and you can see right here, just a couple red flags on gold. We had a breakout and it failed. Now we had another potential breakout and it failed. So I'm not too certain about this breakout. So, like I said, it's not really the greatest long because it already failed a couple of times. But you could try to go long above this highs. I am going to sit on my hands. I need to see the highs of 1976 broken and a possible continuation north before I go long on this pair, just because it already had a couple chances to go north and it failed. So that being said, it could be an explosive move back on up. I'm just going to sit out, wait, because anything can happen if it's failing multiple times. Aussie dollar. Take a look at this same thing. Pretty much all the XXX USDs are experiencing this kind of weird, choppy condition right now. And to sit out, GA, same thing as EA, as y'all can see. Nothing really happening right here. I would like to see more of a convincing move. Right now, it's kind of just a no man's land, so I'm going to set that one out. What else do I want to break down? Did I break down any NZD pairs? Probably not. So let's break down a Euro NZD. We're bullish, but we are at the higher end of a longer term range. So I'm going to mark that up right here so y'all can see. But I do trade the 4 hour time frame, so we're not really worried about that. But looking at this, we are at those highs. So this is significant. We are at significant highs. These are major highs. I would be careful buying into this. If you were long, probably back here, could have had a nice 2-to-1, 3-to-1, 88 pips going for maybe 240 would have been 3-to-1, but even 2-to-1 would be solid because you are at the higher end of that range. So I would look for a possible trailing stop hit, collected like 1.5 R. That's solid. Sometimes it happens. Now I would wait for a potential break out of the highs of the quarter, and we're gonna wait. Interest rates are coming, so high impact. Anything else I would like to trade? Maybe I'll look at Tesla. I like Tesla, but it's undergoing a deep retracement like the rest of the tech stocks. Tesla could be tech, automotive. It's a combination, so it does move its own way. Lastly, let's take a look at Bitcoin. I want to break it down for the crypto guys. We're going into 38 minutes of this recording, and I hope y'all had a great experience this entire time. You can see I do read the markets. I can trade. I'm a day trader, and I'm also a swing trader, passive investor. I do everything. Just find enjoyment in my job. I like to read price action. I like to take good setups. If you like to do that, then you can trade for a living. But let's look at Bitcoin. We have experienced some major highs. We experienced yearly highs, which is why we are in a congestion for so long. You see back there, back in June, back in last May, we crashed into those highs actually. So if you were buying down below around June 15th, which I personally would not have even bought that on June 15th, there is not really any good moves for me to buy Bitcoin. I would not have bought Bitcoin at all this entire time. So if you got lucky, you should be getting out because it's not really the greatest move. But looking at the daily chart, I would wait for these yearly highs to be broken of 32,513, and then a possible pullback and a continuation north. So right now, Bitcoin is in a range. It could even be bearish and come back down if it breaks 29,311. We could experience a bear market on Bitcoin. It could be a temporary bear market, and as long as it stays above the highs of 24.6, we could possibly be looking at a possible range until that bear market is over. Uh, but for a longer term bear market, I would actually need to see these lows broken and possibly further down. So we're looking at the lows of 18,000, 19,000, around 19,000, around this low area right here. If we see those lows broken, then we are going to enter a possible bear market all the way through to sub 15,000. That's if then. It's far from that, so don't be too fearful. Just know that we are in a congested longer term. Looking at the weekly time frame, just to look at a longer term, we are still bullish for those of you that are a little scared and concerned about your passive investing. If I was passively investing in Bitcoin, I am still bullish, so that's a great sign. I would just be deploying capital each month because there's not really much happening. It did have a nice breakout around March, and the price did have a reaction from that low. It did pull back and continue north. So I'm just looking for the breakout of 32,448 before deploying more capital into this. And if that high does get broken, great news for those of you that are bullish on BTC. Those highs are broken. I am looking to take it on up to about 50,000, where we can see some more possible reactions at that point. But I'm trading Bitcoin, like I said. I'll be deploying capital passively over time. It's not something that I'm going to be day trading nor swing trading in the immediate future. I could swing trade this as well, but this is more of a longer term investment. For bears, for sellers of BTC, I would be careful. There was a couple opportunity to sell, and they both failed. There's an opportunity back in March to sell, April, March, around that time. See sellers. They tried to take it on down back in February. They failed. They tried taking on down back again for the second time in March. They failed. And then they tried to take it on down again in April, and they are failing. So that to me is telling me 3 times they failed to take it on down, and price did not really move on south. So they're very weak, and that's manipulation. So I'm completely bullish on BTC. It's a small upturn right now, but everything big starts off small. So you might just have to wait, be patient. But Bitcoin, I am going to be bullish in the longer term. Like I said, 4 hour, we can take a look at this. Absolutely trash, garbage, nothing. I wouldn't even want to buy anything if it breaks above the highs. I have an alert right here set for 30,463 because I was actually looking at a potential long if it broke out of this little range right here. But to me personally, I just don't like that. I don't like. It's not my most favorable condition. Smaller time frame, it is possible to go for a long up to 32,000 and then take profit and wait. But I just don't like it. So I don't like something, I'm not gonna trade it. And that's about it, y'all. That's about it. We are in the London Open. I'm gonna show y'all the Euro USD after. I'm not really focused on breaking these down. These are the US dollar treasury bonds, and it's kind of congested. And I would trade this based off of the daily time frame. And then I look at the rest. Let's take a look at Volkswagen one more time, and then take a look at Euro USD and my CAD JPYs. So Volkswagen, nothing. Like I said, it's not really interesting, not really appealing. Then he even gap up, it gap down, and we're kind of just trash as well. See, it's a Monday, so I don't really expect much out of Mondays. Take a look at Vita. It's still closed because it's the U.S. market, so you won't see it moving. The New York Open and Euro US dollar. Ooh, nice. It's actually been moving on up. Nice little bull market, but it just happened, and I'm a little concerned about that. Like I said, me personally, I would like to look for false breakouts to the north side. So right now, I'm actually looking for a possible reversal back to the lows of the day. If it breaks the lows of 1.11314, like I said, I have a setup, a strategy for everything. So I'm not impressed by that move. It is nice to see that we did see some buyers step in on the Euro U, but unfortunately, it's not convincing to me. I'm going to give y'all a couple red flags right now. Buyers were long at the break. Then we had a false move. Sellers came, hit the stops. few minutes later. And then we had another breakout right here. So if this does fail, this is telling me that we are potentially bearish. I would actually need to see the lows of 1.11314 broken before looking for some sells. And even if that happens, we are near some support. And that's conflicting with my setup. I like to see clean moves, and this is a tiny range. So even if we do break back into there, we have some support right here. And it's not going to be that strong for me to take a 2-to-1. As you can see, it's going to be like a 6 to 7 pip range. So personally, I would need to see price break on higher and then break and reverse. And then I would look for possible shorts. But everything is too tight. It's too congested. It is possible to trade this. I'm just not too interested in this pair right now. So I'm going to be taking a day off from my day trading. But it's not really that much follow through. We did break on out up, but I haven't really seen many breakouts happen today. Is the very first time I'm seeing a breakout. So I would like to actually have seen like cleaner moves, better bull market moves in the past 20 minutes before this happened. I did not see that. All I'm seeing is just tightness. Everything is kind of squished next to each other every minute. And that's telling me that the velocity is weak. The magnitude is also not so strong. We can see in the past hour. Oh, look at you see in front of you. See you see. Okay, so you see what I'm saying. Like literally, it happened this few seconds. I swear to God, like this is not pre-recorded. You see that, right? There's no chance for me to get in on that. I marked it off. I said support. You see, it's reacting to my lines. I told y'all I'm not bullish. I'm so happy I can record this stuff because some of y'all don't even believe me that I can reprice action. You're like, oh, he's capping. Like, look at this shit. Look at this right in front of you. Come on now. And I still wouldn't trade this because we're near daily lows. Like, we have some lows. Too many reactive lows. We have these lows. We have these lows. We have these lows. And even if we pierce on down to lows of the day, I would still need to see a range bound move happen. And it's going to take 20, 30 minutes plus to set up. And at that point, it could just be a cap, some more cap, So definitely not bullish, especially after that move happened. I am not bullish. I would never be buying this. The magnitude of the sellers to buyers right now is just crazy. Even if we do have a false break on down and a move back on up, to me, that's chop. That's 3 waves, 1, 2, 3 waves of equal size. So even if it breaks out, I would still need to wait. So this is why I don't trade Mondays. I trade for about 30 minutes to an hour and a half daily. And I would have to sit here and wait because there's nothing for the next 10, 20 minutes. I can already tell. So there's nothing on your OU, but you're able to see that like physically in front of your face. If I do take a potential trade right now, I would not even have the most rewarding trade setup. We're looking at taking profit down to daily lows and only to daily lows after a potential pullback, and that's not happening at all. I just leave this alone. Don't want to trade this. We are bearish. I do believe it's going to keep going down for a little bit, but don't be surprised if see this little support line right here, if it pops on back on up above 1.11270 and just slows down. That's what happens on Mondays. It's trap day, so I sit out. Lastly, let's check out CAD JPY. This is why I had my trailing stop deployed. There's nothing too interesting on this pair today. I might just be sitting on my hands. I want to know what that is. Probably Euro USD, probably hitting my alert. But yeah, CAD JPY, nothing. Taking a look at the 5-minute just to see if it's attempting to break the lows of that range, and it is. So unless we see a false breakout of these sellers right now and a possible move back north, it would trigger my buy. And like I said, it would follow suit with my narrative. It's my market. I'm trading within the market. I create my own market within it. So it has to respect my parameters. Does not do that before the end of the day, I will cancel these orders and I'll just look for new orders tomorrow during Asia session. But that's it for right now. It's been 49 minutes. I appreciate every second of your time. This is just me being completely transparent and fluent in market literacy. Hopefully, y'all that watch this to the end, and you could physically see everything happening. See that like I said, I don't cap. Everything that I do is real. I broke down so many pairs and so many different markets and sectors in front of you, and you're actually able to see the 1 minute react live in front of you, London Open, everything. Like this is going to be a weekly technical breakdown. End of the week of July 24th, 2023. And I am signing out. Good luck to y'all trading this week. Be careful. It's a slow start. Inflation happening, or interest rate happening in multiple countries and everything. So could be a slow start of the week, but it's the end of the month. And yeah, I'll follow up with y'all in my Twitter and my Discord, on my Instagram. Everything is going to be in the description below. You can also follow up with my Forex stocks page. It's 1minutetraders.com/Forex stocks. You can also go to 1minutetraders.com, click on the Forex stock tab. If you're interested in private mentoring, private coaching, I have a tab for that. Send me an email first or DM me and I will follow up with you. Also, if you are interested in my Forex Academy, it's a short-term 7-week course. It's all online based. I don't teach it. I created it, so everything is already pretty much there. And it's go at your own pace. It's also under the Academies tab, but I would recommend the private coaching over that if you really want some more hands-on and actual training and teaching from me personally. Other than that, I'm just going to be waiting, sitting on my hands. It's been a great hour-long breakdown. And yeah, y'all trade safe this week. Good luck. And don't force your trades. Always have a setup. Always have a stop loss, profit target. There's some ending notes from this video. For those of you that actually stick around, I'm going to reward you with some tips, some helpful insight and advice about trading. Always have a trading system. Master your strategies before you take any trades. You don't want to be taking trades and not knowing what to do next. A trading system is a fully built mental system where you know your market conditions, whether it be trending, range bound, or choppy. You know your entries, buy, sell. You know your exits, take profits, stop loss. You know your position sizing. You know your lot sizes. You know your risk management, 1%, 0.5%. You know your parameters, you know, and you have back tested and simulated this in real time off of a real simulator and in real life. It's the entire concept. So you build an algorithm in your brain, and that's how you create a trading system. That's why it takes a very long time, and you need a coach, someone to actually train you on how to design this, because one flaw can screw up your entire process, and then you're going to be frustrated as to why you're still not profitable. And your journey could take years. With a mentor, a coach that has been through it, created multiple systems and strategies, is the easiest, fastest route, because you're following the footsteps of a professional and you're getting in, the greatest insight and information. So even from my free videos, it's still not telling as much as it needs to. I can only tell so much for free, but there's a lot of work that I do with my personal one-on-one coaching clients that I do not do for free. I have a lot of reasons why. It's not because I'm hiding stuff. It's literally because everyone is different and it requires a lot of work to really tap into your mind, find out your habits, and work with you on your strengths and weaknesses, on price action interpretation. There's a way to read price action, and there's a way to trade it. And every professional that is consistent and does this full time for a living actually has to go through this process. Same process for everybody. But yeah, have a great week and trade safe, and take this more seriously if you want to do this for full time. No jokes, no freebies. Gotta get a mentor. All right, y'all. Peace.